We are about to enter the possible most volatile time of this year so far in the stock market. Hello everyone, welcome back to the channel. Quarter 2 earnings is about to start, and it is important to understand what to expect and how this earnings could easily affect our investments and the whole stock market. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below. First of all, we gotta remember that during the beginning of Quarter 2 was when stocks started to recover from the March crash due to the pandemic last year. The S&P 500 went up 25.5% in Quarter 2 2020, the Dow Jones 22.9%, and the Nasdaq a whopping 38%. And even after that huge run-up for the rest of the year, the S&P 500, the Dow Jones, and the Nasdaq are up about 12 to 16% year to date. And even though we have seen a lot of volatility in different sectors, we need to understand that earnings could help or affect a lot of our investments and the overall market. And even more when investors and analysts are expecting high double digits performance for Quarter 2. If companies do not achieve those expectations, things could be bad. Estimates have been steadily going up, as we have been constantly pointing out in our earnings commentary. Though the favorable revision trend has eased off in recent weeks, still in this chart we can see how analysts have been increasing Quarter 2 expectations since the beginning of the year. Started the year expecting 41.6% growth, and as the economy has apparently improved and companies have reported excellent numbers so far, now they expect a 60.7% growth for Quarter 2, in which the growth will be led by a near 570% increase in profits for industrials, one of the hardest hit sectors during the pandemic. But this week we start with banks leading the way into earnings. We have first JP Morgan, Goldman Sachs on Tuesday, Wells Fargo, Citi, PNC, and Bank of America on Wednesday, but we also have a very important company, which is Delta Airlines, reporting earnings on Wednesday. In my opinion, both the banking sector and travel sector, which are airlines, cruises, and hotel stocks, are very important to see during earnings right now, as those companies are the ones that will certainly confirm how the economy really is. No matter if you don't invest in these companies will tell us if we're good or bad, or if the economy is improving or not. The banking industry is expected to produce a blowout for the second quarter, with the S&P 500 financial sector earnings doubling year over year, according to Refinitiv. Major banks recently announced they will boost dividend payouts after the Fed or Federal Reserve gave lenders a thumb up as all 23 banks passed the central bank's stress test, which basically this test determines if the bank has enough capital to withstand a negative economic shock like what happened last year during the pandemic, and obviously investors like the boost in dividends. Obviously, banks saw heat last week, as well as the treasury yield dropped and equity markets dropped, believing that bond investors were signaling an economic global slowdown, and even more after what happened in Japan. Remember that Japan declared as a state of emergency because of the new COVID Delta. But if earnings are good or better than expected, it could help stabilize the sector. Another important factor to look at is inflation. Many say that inflation will start affecting and become a bigger issue over the next months, as apparently the CPI inflation rose at a higher than expected annual rate of 5% in May, and June could also be hot, which, even though many fear of a slowdown and a bad Quarter 2 results, others believe that we are going to be seeing the second best year-over-year quarterly gain in the past 25 years. But we have to be realistic and understand that there is not much room for error here or margin for disappointment, as Quarter 2 2020 was during the peak of the pandemic, where companies were getting hit harder, but we cannot expect too much either. Many also expecting excellent numbers from banks, as they might have or should have been able to release more reserves. Remember that during the pandemic, banks were stashing billions of dollars to prepare for a lot of loan losses, but banks have made clear that credit outlook continues to look quite strong. If we continue seeing that, we will be more than fine, but if by any means or any chance it goes the other way, we might enter into volatility, as that might mean that banks do not believe we have recovered enough to be almost back to normal. Now, many of you may remember that last year I used to do a video each quarter comparing all banks after they reported their earnings in order to know which one was the cheapest one or which one was the best investment and how the economy was doing. Right now, year to date, Wells Fargo has been the top performer between the four biggest banks with a return of 45.4%, and Citibank, the worst one, with a return of 11.5% year to date. In the past year, same performance, Wells Fargo being the first one and best performing stock with 72% return, while Citibank 30.69%. I do have to say that I was investing a lot of money in Wells Fargo during the pandemic, as it was certainly the cheapest one at the moment, and even though it was a risk investment, and even more when they stopped paying dividends, still they have outperformed other banks in the past year, which I think it is incredible work. I could do a video analyzing bank stocks again after they all report earnings this quarter and compare my decisions to last year's decision. Let me know in the comment section below if you are interested in that, so I will do it after they all report earnings. Now, for the travel industry, in my opinion, we should also expect very nice numbers, but be careful because of the different COVID variants that have been available around the world. Just like Japan declared a state of emergency, many other countries might do the same. Maybe not that hard in the US, as we have seen how we have almost gone back to normal. Not in every state, as apparently only 48% of popularity in the US is vaccinated. But in states like Florida, I could say that everything is almost back to normal. But there are countries in which we see some restrictions still, but we have seen how some cruises have started already this month, which is an excellent sign of recovery. We know that domestic leisure is very strong and that we are back to pre-pandemic levels, which might mean that we should expect excellent growth from airline stocks for Q2 earnings. But taking into consideration that that is only in the US, again, international travel is still difficult for airlines, as it is down by a lot, as just recently the European Union added the United States to the list of countries from which passengers are welcome, although some countries still require people to quarantine upon arrival. Now, as I said in my last video, even though growth stocks are dropping, because we can see that Fubo TV is down almost 3% today, Wish about 1.60%, The Tooth Chef almost 1%, Shift 0.56%, Unlimited 1.80%, and many more are still down. The S&P, the Nasdaq, and the Dow Jones dropped last week, but today are kind of flat. But I don't believe we are in a crash or correction right now. I do believe we have to prepare ourselves, as earnings season is a very volatile season, and any bad announcement could affect the entire sector or even the whole market. Bank earnings will most likely lead the rest of the season, so if we see bad numbers this week, it will be a bad and volatile month, most likely. Hopefully, we see excellent earnings, as many expect, without surprises, so we can see how well the economy really is right now. But as the stock market just opened right now, and we can see the stocks were flat, as people are like this waiting for earnings to kick off. I do have to say that I will be posting videos on earnings on companies that I am investing in right now, analyzing them, and also of companies that you guys recommend down in the comment section or in the Discord group chat. Hope you enjoyed the video. Please smash that like button and subscribe, since it really helps the channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below. We are over 550 members already, so you are welcome to join and have fun with us. Thank you, and see you next time.